Why launch a new fund now? Like get into mentoring, get into consulting. Why start all over again?
I want to keep doing that. I don't think there could be a better time than now.
Your work experience will always come into play. It builds resilience.
Founders in India, I think, need to change their outlook a bit towards VCs. Once they get the funding, they feel they can grow the business without anybody's help, which actually is not so true.
What are the qualities that you are looking at in founders?
What we want in a founder is definitely coachability.
A lot of founders struggle with understanding finance.
All of this becomes extremely important because business may be good, but you can mess it up with finance very easily.
What would success look like for you beyond the funds and the money?
Like I say to everyone, right? The success of a fund is the success of the portfolio.
One hard lesson?
I thought corporate career was the best career ever. Some things cannot be undone.
What do you think are the underestimations that people have with the VC space right now in India?
VCs are like those villains in the picture where, they come and pounce on you.
I have known Yagnesh Sanghrajka for years. Calm, razor sharp, always the grown up in the room. So when he launched 24/7 VC, I had questions. Why start a new fund now? What's still broken in the founder investor dynamic? And what's it like going from funding startups to becoming one? This is an honest inside look at the second wave of Indian startups and what it really takes to back the right founder and be one. Let's get into it.
That's actually a great way to begin because we've connected so much over the last 4 5 years, and I knew you in your 100x VC days, and now we are going to talk about 24/7 VC, which is the brand new venture. But before I get into the details of 24/7, I wanted to ask you, it's been a fairly long career, a very successful and a very, very diverse career. Why launch a new fund now? Like, I mean, you could get into mentoring, get into consulting. Why start all over again?
It's been a very diverse career. I don't know if I can call it successful, but I have been able to impact some people around me, which I kind of feel good about, satisfied about, and that happens when you start, helping people in any way, right? Whether it is, funding, whether it is mentoring, which I've been doing now, with 100x, and now, of course, with the new fund, 24/7 VC. Want to keep doing that. So and to come to this question where why now, I don't think there could be a better time than now, because we are in this, like I always say this, that we are in this second phase of the startup wave, right? This is like startup wave 2.0. The next set of startups are going to define India, what India will become in 25 years, uh, because the first wave was pretty much transitional learning. A lot of learnings have happened in the last 10 years, but now I think there's a time where VCs and founders both are going to undergo transformation, because now the journey will be much more exciting. You see a much higher quality of breed of founders who are kind of coming out now, having spent 6 years in VC industry. Now I can see the difference. So I think this is the right time where a fund like ours, 24/7 VC, can make a useful difference, and in a way that I have always dreamt of making it happen.
No, makes a lot of sense. And obviously, broadly, when you say that this is the second wave of startups, it's very logical, right? If you're ever looking to become the second Silicon Valley in any form or manner, the first wave has taught us so much that now that the startups that are coming up and the founders that are actually playing these startups have a lot to learn from and understand the Indian ecosystem better. But what specifically, according to you, is the gap that you feel hasn't been filled yet?
I think a lot of gaps have been filled, to be honest and to be fair. But what has not yet happened is the evolution of the VC ecosystem. What has happened is there are very few VCs who are marquee. The ones that if I was a founder, I would want to take money from. There are quite a few, but not as many as there should be. If you really want the ecosystem to become like an advanced country ecosystem, like a US that you see, and you want to emulate, I think there has to be many more such investors that need to come around, and which is why there is a. I mean, likewise, if somebody has to say there's enough supply as much as demand, but the quality of supply needs to improve drastically, and which is what I think some people like us at 24/7 VC, we are trying to achieve, that quality of supply. And when I say quality of supply, it means quality of capital that comes, the kind of mentoring, handholding, heavy lifting, shadowing the founder comes with the capital, is what I really mean by quality of capital. I think that is something that needs to change, and it will change. But we need many more people to come ahead, be bold to kind of start enough at the ground level, at the seed level, at the pre-seed level, to come in and help founders.
Hmm.
That is what India needs today.
Yeah, yeah. So not just throw money at the problem, but actually help
Exactly.
grow what the founder and the company actually needs, except for just money. Which I mean, my story, so I can completely relate with that.
Absolutely.
It's not just
Absolutely.
the money that you need. And you have, of course, been in this role for the last 6 years, as you said, and you've been a CFO for so much longer. And there's a two very different roles. Like the CFO is always like saving the money, and the VC is always like, okay, let me give you some more money and see what we can do. But what do you think are the common misconceptions, I could say, or the more underestimations that people have with the VC space right now in India?
I think a lot of misconception is that founders in India, I think, need to change their outlook a bit towards VCs.
Okay.
What we have heard is that VCs are like those villains in the picture where they come and pounce on you, and they come and kind of make your business miserable. You keep getting answerable to them. That's the kind of stories you normally hear from founders, but I'm sorry to say that, I mean, that's not true. Luckily, I mean, you could talk to some of our own portfolio founders and you will know it's all about a partnership, right? You do the right thing, the VC gives you back the right thing. That is how typically one would imagine the relationship, and I think that needs to change. VCs should not be looked upon as the funder of the last resort, that chalo kuch nahi hua to then I will now, my friends and family, the VC is the last resort, because you really don't like a VC being on board, having a director seat on your cap table. I
Yeah.
think that is needs to change. People need to look at investors with a much more different lens. You have to look at them as partners, because there is certain obligation, right? When a VC comes in, it's not just about what you have to think. Why is he asking those questions? Because you are doing something wrong. Maybe
Hmm.
you are not really following the processes and the systems that you normally need to follow
Hmm.
for a good, well-funded startup, right? If you don't do that, then obviously the VC would want. So I think what I'm trying to say is it needs to be looked at more with a lens of partnership rather than an investor founder relationship. When
Hmm.
that happens, and I have been lucky to kind of fund founders who have that mindset, who have exploited us to the maximum. I think the founders also need to learn how to exploit, how to kind of really use that relationship of a VC well, because that is something founders don't really. Once they get the funding, they feel they can grow the business without anybody's help, which actually is not so true. I feel that they need the help. I mean, some people don't as much, but some people do. But it's a question of relationship. You have to develop that partnership and trust.
Hmm. Very fair point, Yagnesh. And at the say seed or the pre-seed level, I can understand how that relationship is actually not used very fruitfully. And you said very rightly, it is a question of mindset for the founder as well, because a lot of times I feel like people don't even ask the right questions, right? You don't, as a founder, you don't even know what to ask, so therefore you're not getting the right answer. And VCs come in two versions mostly. One is that they will come in and say, why are you even taking a day off? And the others will be like, I'm hands off, I've given you the money, now figure it out. If you were to create a 5 point rule book for investor for founders when they're looking to partner with VCs, what would those 5 markers be?
I think very simple. This, I'm assuming you're asking a question after you have been funded by a VC. Is that the question?
No, I'm
Because a lot
asking.
changes after you get funding.
Yes, a lot does change after you get funding. I agree. But I think you can, okay, so then we could possibly split it into two ways, right? Before, if I'm a founder who's looking for an investor, what should I look for? Which is,
Yeah.
which you very, very nicely kind of put down to say, look for someone who's willing to partner, look for someone who's in the industry that you are interested in, look for someone who's giving you more than money. A lot of times it is possible, but a lot of times at seed pre-seed stage, you have 4 5 months of runway. You're not really thinking straight. All of that. So the first part is that, and the second, of course, as you mentioned, is once you've got the money, how do you use the
Yeah.
relationship well?
No, no, fair point. I think we should split this into two parts. One
Hmm.
is what should the founder do before they raise funding, once
Yeah,
they've decided to raise funding, is a very important one because that sets the tone, right? That
yeah,
sets everything up.
yeah.
What you should, apart from whatever I already just said, I think important is to approach the right VC. First of all, you need to also do as much research on a VC that you're pitching to, as much as the VC is going to do a research on you and diligence on you before they fund you. Very few times it is a one-way street. People just pitch as much as they can and they hope that somebody lands up with a term sheet, and that is how it's working right now. I mean, spray and pray from the
Yeah.
founder side. That's
That is
not the way to
exactly
do it,
the,
right? I mean, that is why the effort goes, and then the whole thing of frustration comes in. Founder is frustrated that, I have done 50 pitches, not one guy is willing to fund me. My idea is brilliant. Of course your idea is brilliant. Every founder's idea is always brilliant. So but please understand that you have not targeted the right VC. So I think
hmm,
first need to research the VC well. What is their portfolio? And by the way, more important, go look at the portfolio, see if you know somebody in that portfolio.
hmm,
If you know a founder of that VC's portfolio, that gives you a better opening with that VC. That
hmm,
founder recommending you, you have 10x more chances of getting an audience with the VC because it's come through a founder. I mean, I would not ignore any of my 300 founders portfolio guys recommending me a deal.
yeah,
I will not give them an audience, right? That's easy. Tomorrow, let's say you refer me a founder.
yeah.
I'm going to look at it. I'm going to fast track that deal. Let's put it
Hmm.
simply.
Sure.
That important. And then you also need to see their thesis, everything. I mean, all of that, you need to do a little bit of homework, and you need to be, again, then, never give up attitude. You keep doing till you get the first check or the term sheet. That, of course, many people have said this, so I'm not going to repeat it. Coming to the second piece, which is the most important thing, after you've, let's say, with your smartness, idea, everything, fantastic passion, everything, you've got landed a check, the bigger important thing then starts, because after that you've got the money and maybe you're not spending it the right way that was envisaged or agreed between the investor. The best approach is to keep the investor informed at all times. I think what most founders I have seen, and I can say this
Yeah.
because we funded like 200 startups, so we
Yeah.
know most founders do not feel it is their obligation to keep the investor informed.
Hmm.
And also some people do it when they are very successful, when their traction is growing fast. But I think more importantly, when you're not doing so well, is when you need to tell the investor, and in a right way.
Hmm.
I think that is not yet happening in India. And that is the reason why I think the mortality rate in our business is very high.
Hmm.
The founders who die or wind up are much more than people who succeed, because I think that piece is missing. It's one of the factors. It's not the only factor for failure. A lot of other business factors are the failure for a startup, but one of them which you are letting it go out of your control is that the investors already put faith and trust in you and the
Hmm.
capital.
Hmm.
Now to let it go just because you're not informing them in time or you're not keeping them updated is the stupidest thing to do.
Yeah.
So I think some of the founders need to understand that
Hmm.
and have a rigorous internal review and share it openly with the investor, because he's already in, the investor is already on your side. To
Yeah.
think that the investor is on the other side and I have to defend my business even after the guy has invested, I mean, there couldn't be any more stupidity than that. I mean, he is on your side, he's going to work for you. That is, I think, something that founders need to know post investment, apart from all the other things that they should do.
Essentially, take the investor off the pedestal, talk to them like they are your partners, and seek help before the shit hits the fan,
See,
so to say.
and then even if the shit hits the fan, Neha, the
Hmm.
problem is you've already informed the investor. They know
They know.
that
Yeah.
you're going down. It is much more credible to then go down, even in a, I mean, it's not a good scenario, I know, but
Yeah.
at least you've got investor on your side. He might just fund your next startup. Who knows?
Yeah.
Because he likes you. The
Yeah.
idea didn't work, but that's okay. The founder is good. That's how
Yeah.
you'll end up your second check in your next venture. That
Yeah.
that
Makes
is that
sense.
is very important.
Makes sense. And all founders, I think, until they succeed, they end up wanting to try. That's
Yes,
the,
yes.
that's the whole case.
I mean, that's exactly. And we are yet to see that second wave of entrepreneurs doing second, third startup. I think that is
Yes.
just beginning. So
Yes.
you will see much better deals coming to VCs because people may have failed and start another. They are much more intelligent. So you will
Hmm.
see better crop of founders coming now.
Speaking to the crop of founders, do you see as a trend the average age of founders increasing? Because I think up until now, what we have seen is college grads, I am, IIT guys, 20s, 30s. Because once you are married or once you have kids or whatever, you're in your 30s, the risk taking ability goes down substantially. But has that changed?
I think that has, and it is a. I don't see a clear trend though. We still see, like we've got like post launch of 24/7. Just in under a month, we have like what 800 decks in our inbox, and we are still grappling with them. But but just to see that kind of population, we still see a lot of young guys, but we are also seeing a fair bit of guys who have experienced and then coming to startup because, and I think some of the most successful companies while we were at 100x were run by mature founders, successful guys having understood the business model, having worked in the same industry and now doing trying to do something in that industry. I think that is growing. It definitely is growing. I don't know with what pace, and I'm honest, but just we are on the ground, so we can feel it, we can see it. People know that their chances of failure are much less when they have a certain, I mean, it's nothing to do with family background, whether you're married not married, really doesn't matter. In this case, I mean, we don't look at it at that lens. But yes, we have seen, like a lot of fintech founders I have funded, mature founders, they have been at the bank capital, they have been in BFSI space, now building, trying to build a solution like that in
Hmm.
fintech. I mean, so you've seen those examples very
Yeah.
much, and these are guys who know how to navigate much better than a grad kind of graduation guy just coming out, and because they have not seen the world, they have
Yeah.
not seen experience. For them to pivot is slightly more difficult, though easier because they are nimble footed.
Hmm.
But a mature founder is able to navigate it much better.
Yeah.
And I may be biased to a certain extent. Definitely, if there's a mature founder coming with a startup, I'm more keen to look at that than probably a young
Probably a
founder.
college guy. Yeah, and it's also fair, right? It's. I mean, if you were to draw an analogy, it's like how they tell you that before you do an MBA, get some work experience so you can actually, understand or learn more from the MBA. It's the same concept. If you have
Exactly.
some work experience, whether found as a founder or
Whichever way.
yeah, your work experience will always come into play. It builds
Exactly.
resilience more than anything else.
It does. And then you have failed ones, right? You know what not to do,
Yeah.
what you know what to do, and those things are very important to know,
Hmm.
and that kind of eliminates your margin of error as a VC.
Yeah. Yeah. But at the pre-seed stage, I would assume that there is little data. So even if you have now moved from pre-seed to the seed stage, there is little data. So you're essentially banking on the founder, right? So what are you truly betting on? Like, what are the qualities that you are looking at in founders?
I think topmost everything. I mean, given all the requirements that you see in a founder, where you got to shortlist it, the hustle, the intelligence, the understanding of the domain, having a rockstar product, all of those are pretty cliche. Everybody wants it, but what we want in a founder is definitely coachability. I think coachability ranks to us as one of the topmost qualities in a founder. Why? Because you will face problems once you get funded. You will face issues. You will face decisions in your startup where you might have to change course, and that high coachability factor allows you to do that. If you're not coachable, if you do not listen to people around you, in fact, most of it investors, then
Hmm.
in that case, you are probably increasing your probability for a failure. And this happens much later than the founder realizes. By the time it's
Yeah.
happened, they don't realize it, and when it's happened, it's too late. So I think that quality we definitely see when we talk to founders. We spend time, we
Hmm.
are listening, but we know that at what stage is he coachable? Is he listening to you? Is he taking inputs? He may just disregard your inputs, which is fine.
Hmm.
But at least is he taking them in? Is he doing some work? Is he
Hmm.
answering your questions, or he is totally hell bent on his product and doesn't want to see outside of his product or service? So I
Yeah.
think that is very important. And there's one more thing. I think a lot of founders underestimate the importance of knowing how to fundraise. I think they feel that if I have the product and everything going for me, I will get funding, which is true, by the way. But I think every founder will do good if they just get coached in fundraising. I think that's something that is, you can't separate it out if if you are looking for venture capital. And if you start as early to understand how a fundraise happens, it actually also changes your journey quite a bit. So I would still want founders to understand fundraising well when they're starting the particular journey, right? That's very important, because the way you build, some things cannot be undone. For example, if you crossed an X dilution before going to an early stage seed fund, you're already out of business. Somebody is not going to invest in you. So you're making those mistakes very early, which
Hmm.
cannot be undone. So I
Yeah.
think some of those lessons need to be very, very clearly understood by some of the founders.
Yeah, absolutely. I mean, you mentioned two very clear problems that we generally would see in founders, right? One is that they might have the best idea in the world, but they don't do a good job of actually presenting it. And that is essentially every pitch that you do is an interview. So you have to, ace how to interview well. And the other, of course, is that once you have started the journey, at some stage, if you're able to take feedback and make changes according to that feedback, or justify why you're not making changes, that
Yeah.
that that changes the way the room will look at you, because
Yeah,
you're
some of our
responding better.
winners in our portfolio have succeeded because very early they realized maybe this is not something that is a big problem, and now something else is, and they
Hmm.
quickly pivoted before you could even take your second check. And if your
Yeah.
investor is together, you make that happen. You get another funding or a bridge round or a second round to make that happen. That's very important in our journey, right? In any founder's journey.
Yeah. Yeah, that's absolutely true. um, you also mentioned, and I was reading this somewhere, that a lot of founders struggle with understanding finance. I mean, aside from how they present themselves and all of that, they don't get the numbers. How would you explain this to someone?
Let's say any product guy, any technology product guy who has fantastic understanding of the product cannot scale it if you don't understand the commercial aspects of it. And when I say finance, finance is very overarching. Finance includes cash flow management. Finance includes pricing your product right, uh, selling it at the right price to the right customer. That is very, all of that is actually under finance. So making a business case, making a scalable case requires finance input, which is why we have coached founders in our journey earlier on numbers, on how to make a model, how to present it, how to think about projections, how to think about runway, how to think about cash flow management. All of this becomes extremely important because business may be good, but you can mess it up with finance very easily.
Yeah.
So I think that is something which we still, and we'll continue to do that in 24/7 VC as well,
Hmm.
because that is something that is an industry problem which we need to all solve.
Yeah. Another way that I would possibly look at it, and obviously this comes from my personal experience, is that you can know the numbers and you can create a great sheet, right, which has 5-year projections, 6-year projections. But what's missing most of the time is that you don't have on ground market experience to understand whether these numbers will hold or not. Like, you have earmarked 25% for Google ads, which is a black box, and now that 25 has become 35 and you have no way of kind
35.
of tracking it. And
Correct.
that's what I alluded to in terms of understanding. I feel like the cost of acquisition is somehow not capitulated enough when people think of
But
their.
this will happen, Neha. What will happen is things will change. Like today the advertising costs have skyrocketed.
Hmm.
Founders will have to learn to control other items of expense. Some items they cannot control. Like sometimes the input cost is not controllable because your
Hmm.
vendor is charging you X amount for your minimum number of SKUs or products or whatever, in case of a consumer brand. But you can control other things. You can control your own salaries. You can control your team cost if they are well aligned. I think you can compensate. I'm not saying to the entire extent, but if you have knowledge of finance, if you have knowledge of runway, cash flow management, then you can navigate between line items. Just because one line item is not in your control, your business should not get so much burnt or burning so that you run out of cash. I think you'll have to make those adjustments, and only when you deep down understand numbers well is when you can know your levers well. That is what is
Hmm.
meant by proper financial and fiscal management.
Yeah, yeah. Yeah, and I mean, obviously, founder salaries are the first thing to go, but I wish that there was a system that existed that helped them understand that you keep the bare minimum, and then kind of work through whole thing. And at the end of the day, if the price is not working, the price is not working. There is something else that's wrong, and you have to figure that out.
Yes,
Which brings me
yes.
to the founder market fit concept. I mean, how do you personally see it?
I mean, it's a very difficult term to explain. It's something, I mean, founder market fit means that a founder should understand their market, their ICP. It's very simple. Product market fit is when you reach a particular scale in terms of traction, vagera, vagera, all of that. But I think more importantly, as you rightly said, I think before PMF comes FMF, which is the founder market fit. If a founder market fit is there, then there is hope for a product market fit. And when I say that, that founder market fit is something that you realize way earlier than you reach your PMF, because the founder is what is going to make it happen, right? And if
Hmm.
they understand the market well, they know how big or small is the market. It may be small initially, but how do you capitalize on that small market is something that a founder market fit will tell you, right? If you're understood the customer behavior and you've narrowed down on your ICP, on your ideal customer profile,
Hmm.
is what when somebody would call you that okay fine, you've achieved this founder market fit because you understand your customer well. It is actually a jargon which is simply means you understand your customer well.
Yeah. Yeah, you understand your customer well. I think, in addition to that, what do you think would you having an experience in the industry make a lot of difference? You having some exposure to the industry before you kind of started the whole thing
Absolutely.
makes a difference.
Absolutely.
Of course, by making this statement, we are crushing the dreams of people who want to do things which they are not a part of industry
And
of. But I think,
sometimes it's and nothing is a rule, right? Here you are
yeah,
never right or never wrong. I mean,
yeah,
some kid can come out of college and prove you wrong because
yeah,
you've learned, industry, years of experience of industry, working and all that, and somebody can just disrupt you overnight because they have done something which you didn't even see. So I think
yeah.
it's all of that is happening. I mean, all of that will happen. But yeah, having an industry knowledge obviously puts you at least two steps ahead of anybody else.
Yeah. And if you don't have it, learn. I think the first step should be
Yeah, it's a
learn.
nowadays learning has no. I mean, you can learn from wherever, right? I mean, earlier
Yeah,
those avenues weren't there, but now actually it's an information overload. You need to actually
exactly.
start learning to how to filter information.
Yeah.
That I think is the latest skill required, not just getting information.
Yeah. And if we were now to come back to 24/7, how do you feel? What do you feel will be the key differences from when you were part of 100XPC to now?
Oh, a lot of differences because we understood a few things when we were at 100x. Both me and Shashank, we faced certain issues which we wanted to address, and that's the reason why. One more reason of why 24/7 VC. I think the fact that now founders need a lot more capital, and we are now, let's say, putting in 3 to 5 crores, 6 crore checks as first check, and also follow-on rounds, which we weren't able to do in 100x because obviously the fund mandate prevented us from doing that. Uh, we've understood that unless we back our winners, our IRRs will not improve because we may be putting in 30 companies, but if you don't double down on a good founder and who's winning, who's gaining traction, your chances of IRR may go down suddenly and you will not be able to control it. Here, at least with one round, the founder is putting money efficiently, growing well. You put more money trying to retain your stake in the next round. So we followed this whole strategy where we will keep 40-45% fund deployable for second rounds and follow-on rounds, which is an improvement from our strategy. Also, I think different founders are made of different things, right? And you can't have a standard fit for all, which is the reason why we are flexible in terms of our entry strategy. First check, a
Mhm.
technology business needs to be viewed differently than a consumer business. An industry 5.0 business needs to be seen differently than a deep tech business.
Hmm.
These are businesses which have different life cycles and gestation periods for maturity.
Hmm.
and which is why you need to be cognizant. Every deal is different, every deal, every founder opportunity is different. So
Yeah.
you've got to be very flexible when you are discussing terms with founders, and that is what I feel. And while not really sacrificing the speed, I think
Hmm.
while maintaining the speed of investing, like for example in this case in 24/7, we are going to invest in 30 companies in 3 years. uh,
Hmm.
in the past, we've done like what 160, 180 companies in 5 years. It will be much more quality ad, which will be much more diligence, and we are doing far lesser deals, which means we are
Hmm.
able to give more quality attention, more spending time with founders, understanding them, and then
Hmm.
funding them and understanding how we can help founders. We have much more time to deploy capital, and also when you're doubling down,
Hmm.
it's an important decision because you're doubling your exposure to the startup. So I think some of those improvements in the model has helped us. It took us really 3 4 months to just sit down and refine our investment thesis and strategy.
Hmm.
And industry 5.0, a new thing, something which is not really very popular right now. And I mean, thanks, we have been listening to a lot of good things about industry 5.0 now, and we're putting our research team to kind of have that study done because that's the future.
Hmm.
And in many ways, like energy saving management,
Hmm.
logistics, supply chain, those things come under industry 5.0 actually. and,
Hmm.
and so these are things which are now, so we are more thesis driven.
Hmm.
Both of us are leading different verticals. So I think I'm handling consumption industry 5.0. Shashank will probably take care of obviously deep tech, frontier tech, and enterprise tech SaaS
Hmm.
businesses. He's an engineer, right? So he's ingrained and wired to think like
Yeah.
that.
Yeah.
I'm more of a finance guy, so I understand consumption industry 5.0, manufacturing. So we are sticking to our strengths in this case, and hence we feel we'll be able to do more justice to founders, and help more founders in better ways. So I think those things have become different from where we are, and we've graduated. Our initial learning still carries a lot of weight, and that is what we are going to apply in 24/7 VC.
Got it. So value over volume, find working more closely with the people that you decide to work, and very, very strategic, growth oriented sectors. So manufacturing, industry 5.0, consumption, and deep tech, like very specific strategic
Specific things, yeah.
initiatives. What were the things, now that you are almost a founder yourself, can I call you that?
Yes, of course, very
Yeah,
much.
very
I'm
much.
living the life of a founder. A fund manager raising a fund is as much as a
As much
founder
as a founder
starting
as
his own
anybody
journey.
else. Yeah. So, what were some of the things that you had to unlearn in this new role?
Well, it's been transformational, Neha. I think I was about to tell you before we
Yeah.
started, and it continues after we speak. But it's really a very humbling journey. It's very transformative in many sense.
Hmm.
We are raising a 200 crore fund, right? So it's
Hmm.
significant amount from what we've been deploying in the past. I mean, in 100x we deployed what 145 crores.
Hmm.
Here we are looking at 250 crores. So it's a larger stakes on the table. It's a responsibility on our shoulders
Hmm.
to manage that portfolio. So we are, and just to share with the world here, a lot of my connects of last 20 25 years actually suddenly have kind of come because I've gone out and reached my network, and I didn't know I had that much of support, honestly. And we are humbled in that sense that people have trusted us, some early backers. We released our launch last month, and some people, when we just told them we are starting a fund, people just said we are in. So I think that trust factor, we underestimated ourselves. I think that is important, but we've been lucky to kind of capitalize on this launch momentum, and hopefully we'll also start deploying capital very soon. Idea here is to, and that journey has been transformative. So when you start raising for the fund, you get all kinds of questions. It kind of takes you in into introspection journey. The thesis
Hmm.
that we're building, sub themes, we've really spent like hours just knowing where we want to invest. So certain things that we've never done before, we've
Hmm.
never gone after investors, LPs, family offices. We are doing all of that, like
Hmm.
pitching to them, learning from them, and some of them have come in with that same aligning of vision. So a lot of that transformation, both for both Shashank and me, it's been a transformative journey.
And through this transformative journey and through the introspection, was there ever a point where you were where you felt like, oh, this is what the founder was talking about. This is what it
Yes,
feels like.
very
Yeah.
much. I was just talking to one of our portfolio founders
Hmm.
recently, and I said, "Look, now I'm in your seat very much, and I know how it feels
Yeah.
when you want to convey your vision and you're trying to seek validation, most often than not, it is not taken well. But you are at it. You
Hmm.
will find people, and we did in such a short time. We're lucky to say that, but I
Hmm.
mean, it's a tough journey. You
Yeah.
have to convince, and you unless you're passionate, it won't come,
Hmm.
right? You have to have that passion in you. Only then it will translate to an audience, or whether it's an LP or a founder you're pitching. Because please remember, I mean, when we're deploying capital, we as VCs are also pitching indirectly to a founder. Why should they take money from us?
Yeah.
Okay, this is how we feel. We think, why would a founder come to us and take money from us?
Hmm.
There are so many other VCs who are out there. Why
Hmm.
will somebody want to work with us? I think we have to introspect that and come up with an answer, and that only comes with reputation. It only comes with hard work. There is no shortcut to it. So we've
Yeah.
understood that it is going to be a tough journey, but we both are very passionate about it, and we
Hmm.
want to see this through. And I think we are getting the right support from our portfolio founders, from our past network, from investors who have put in portfolio companies of 100x. I think a lot of them is all coming together. So that's why the first question answer is why now. I think it's the right time. Is every day I'm feeling that.
The moment you turn the lens on saying, I am not going to choose founders, founders are going to choose me, it would help you create your ICP also. Like, which are the kind of founders that I want, I want for them to choose me. What,
Correct.
one hard lesson?
One hard lesson is that I never saw myself as a salesperson, as a fund manager, as a founder. You invariably become a salesperson. So, and it's a hard learning, believe me.
Hmm.
And I never thought I had it in me some years back at least, but
Hmm.
with few experiences, learnings of all these years, I think it has transformed me. So this is I now know what a life of a salesman is, and why salespeople, why marketing guys are valued so much. I think this because they bring revenue to the table, they bring funds to the table, and that's a big task. I mean, it's not easy, but we are realizing that. And Shashank and me both are. I mean, we both, as I said, it's a transformative journey last 6 months,
Yeah.
and a lot of learnings, a lot of like not just one.
Yeah, absolutely. I mean, I have been a salesperson all my life. घर तो sales वाले ही चलाते हैं. There is nobody
बिल्कुल,
else.
एब्सोल्युटली। फाइनेंस वाले खाली नोट गिनते हैं, बट वो भी इम्पोर्टेंट है। दोनों
हाँ,
इम्पोर्टेंट है।
but
यू हैव टू
मतलब
ब्रिंग
घर,
बिजनेस एंड यू हैव टू
yeah.
मेंटेन
If the money doesn't come in, what are
लिक्विडिटी।
you counting, right? So,
एग्जैक्टली।
sales is
सो
paramount at all times.
एब्सोल्युटली,
Um,
एब्सोल्युटली।
and I would like to go back to this managing of house concept. I would like to tie it back to something that you said in the beginning, that the failure rate is extremely high in this. So managing house also requires managing the emotional weight of seeing good people fail over and over again. How do you manage that? What goes through your mind in that sense?
I mean, yeah, it's never a good situation to see a good founder closing down or shutting down, and that
Hmm.
happens in our business. And
Hmm.
it may not be because the founder is bad. It's just that the circumstances. Maybe you are ahead of the market, no fault of yours. You had a brilliant vision. All of that. All you can do is just sometimes make sure that you give your best. Uh, you have time limitations, all of that, but despite capital, sometimes you're not able to fund that particular founder, right? Like a startup pitches to you, deal doesn't happen for whatever reason. uh, I think when I see that, when me and Shashank see that, we go out of our way to just help them to know what will work for them, where should they look for funding, and which are the guys who will probably fund them. And we do that pro bono completely. Like, we have a huge ecosystem of investors, a lot of other VCs. We don't mind recommending them that, look, this is not the stage, maybe some time is left, why don't you just do this, and by the way, talk to these guys. So I think, just in terms of giving back to the ecosystem, is what drives both me and Shashank. I think
Hmm.
the whole passion of giving it back to the society, to the entrepreneurial society, I mean, is very important, and that's what keeps us going. I think that will reduce the mortality rate in our industry.
Hmm.
While there still will be high mortality rate as it is always, but I think we can definitely contribute to reducing that a bit through our
Hmm.
own effort, and I think everybody will have to do that collectively.
Yeah. Yeah. You will need a great crop of founders and a great crop of VCs
Yeah,
at the
you
same
can't
time
you
to
can't
kind of.
take shelter by saying, look, this is 1% business, so
Yeah.
99 will fail. Very easy to say that, right? Everybody
Yeah.
knows there's no big deal about it. What are you doing to actually increase that to 1% to 5%? What are you doing to do that? That
Yeah,
is
and I
important.
feel at some point it might just become like a disservice if VCs just or investors just go out and say, okay, this industry is heating up right now, beauty is doing well, let me put five, beauty brands on play. I think that's a disservice to the founders also because they won't be able to learn
Yes,
if they don't do that.
agree
Um,
completely. Yeah.
but if we were to now sort of shift to the future and say 10 years down the line, what would success look like for you beyond the funds and the money? What would 24/7 successful version look like?
I think we are only gunning for two, three things. One is
Hmm.
from our portfolio of 30 companies,
Hmm.
uh, we will only be, like I say to everyone, right? The success of a fund is the success of the portfolio, how well your portfolio works. I mean, though it is all money, etc., but we are not talking about that. We're talking about success, and success, fortunately, unfortunately, is driven by financial success and outcomes, which means that only a good founder who is able to navigate everything well will be able to get good outcomes for the fund. And I hope we are able to fund founders who are able to align with this, whether it is sustainability, whether it is I mean, to me, I think capitalism is the biggest thing that should be kept in mind. If you have capital, you can do good. It is not that, I mean, capital or sustainability both are not exclusive. If you have enough capital, you can move towards sustainability. You
Hmm.
can do much more good things in this world if you have capital.
Yeah.
And for anybody, this is true for a founder, this is true for any business entrepreneur.
Hmm.
Unless you've become successful in financial terms, you can't make a difference to the society. To
Absolutely.
me, it is very much overlapping, and I don't think it is different. So I think it'll be great if we could create, uh, you know most of our portfolio companies to be that, where they make a
Hmm.
difference to the society and as well create investor wealth, because that's what I'm taking my money from investors from. I think
Absolutely.
I owe it to them. I need to give
Yeah.
them fantastic returns, and that goes hand in hand. It is never either or, so it's always an and.
Hmm. So well chosen founders doing well for themselves, for the investors, and for the economy. I
Yeah,
think
you
that
can't
would be
just keep on doing good to the society and also make money for investors. Both
won't happen.
generally haven't really
Yeah.
been good outcomes. So I think
Yeah.
that has to be kept in mind.
Yeah, that's true. And if I was to now turn the lens back at you, we started by saying that it is a new step after a really diverse and I would still call it successful career. But if you were to look back and look at your younger self, what's the one thing that you think is the most surprising in this journey?
Oh, the most surprising thing, if you really ask me, my son is like almost 30 now, and if I were him right now and looking at myself, I would be more surprised at the way I've turned out to be. I mean, I thought corporate career was the best career ever.
Hmm.
Slowly, the first seed I think happened when I was at Bessemer, and
Hmm.
when I saw venture capitalist world where we were funding startups or even more mature companies. That somewhere I think that seed was sown in me in terms of, we have to, obviously the best way to give is to start funding people, right? I mean, the best, I mean I'm hardcore finance bred, so I always invariably think about money, whether you like it or not, because I feel if you have enough money, you start making good to the society much more than you otherwise can. So that was already there. And after all the corporate stints I did, after I've done 100x, and we were all part of a good journey, I still feel that going back to that kind of, I never would have imagined myself to be a venture capitalist ever. I was always trying to be a fantastic CFO, was a good CFO, which kind of contributes to the company, to the employees, keeps the ship going, contributes to the growth of the business, and that's what I always thought about. I
Hmm.
never thought about that I will be involved with multiple companies, multiple startups, making a difference to all of them. I think I never saw myself doing that at least 25 years back. So,
Fantastic. That
so
is
that way, I think it's
amazing.
turned out well. But let's see,
Turned
it's
out
too
well.
early to call that out. There's a long journey ahead.
And as a parting thought, what do you
Yes.
think? Who do you think makes the best investors? Finance guys, marketing guys, sales guys? Who?
I think I would stick to what we are trying to prove here in 24/7. I think operator VCs do the best work. When I say
Okay.
operator, you need to have run the business in whichever capacity. Either you are like myself, I was a
Okay.
finance guy, I ran businesses, but always in a finance capacity.
Hmm.
Shashank built businesses, he built VCCH right from ground. So I
Hmm.
think operators make the best VCs, and I think a lot
Hmm.
of VCs have realized this. You
Hmm.
might be seeing a shift very soon in terms of very large VCs, marquee VCs are already moving towards getting operators on board,
Hmm.
making them VCs, and I think a lot of that is happening, and you will see much more of that. You will see many more operators turning VCs, many more joining marquee VC firms to bring in operating expertise. So I think
Hmm.
that is very important. That's all.
Hmm.
We are positioning ourselves as operator VCs, which we feel very proud to be.
Yeah, and I can see that the shift from, you know, um, highly qualified but not having experienced within the VC space, the analysts who join the VC and then grow within that. It's the same logic that we were talking about in founders. They don't have the right experience, so they can't really
Exactly.
do that. I think, yeah. So I
Exactly.
think if I was to sort of sum up our conversation, it simply is have the right experience, find the right people to work with, and then just work your ass off.
Yeah, it's if you really summarize it, looks like a very old statement, but there are a lot of layers below it which kind of works behind
Yeah,
the curtains, and one has to really be at it. Really, I mean, it is. I've seen that now in the last 6 months, and it will be continuously that. But yeah, it's an exciting journey. It's very exciting. It's
yeah.
very interesting. You meet new people every day. You learn from them, and like founders as well as investors. I think it's a beautiful journey. I'm thankful that I got to choose this.
Fantastic. Thank you so much, Agnesh. Thank you so much for your time. I'm sure that
Thanks, Neha.
this would be a conversation that a lot of people would be interested in, and it has been very
Absolutely.
insightful to me as well. Thank
No, and
you.
I think any time for you. I mean, yeah, we go long back, so
Yeah,
it's always so nice to talk to you and just reminisce, and also sometimes introspect when you sit down, because in all our daily work we just forget
Hmm.
ourselves, and
Yeah.
it's a good reminder when you talk to people whom you know well. But thanks a lot for having me, Neha. Thank you so much.
Thank you.